Good morning, everybody. Let's get to Tom Gentile in 5, 4, 3, 2.
Gentile, welcome to the program. Tuesday, November 16th, 2021. Glad to have you all sitting in with me here. 9:30 on the bell. I was looking at the bell. Looks a little bit mixed this morning. Got a lot to talk about this morning. Wow. I mean, Ryan and I were just discussing this right before we went on the air, and that is that crypto, how did you say it, Ryan? It took a what?
Jumped off a diving board.
Jumped off the diving board. So guess what we're going to do today? We are going to do what I didn't have time to do yesterday, and that is I want to look at Bitcoin, Ethereum, really those two. Those are the most important ones we want to look at because those are the tides that will rise and lower the majority of boats in the world of crypto. I want to also look at, well, I have crypto on the screen right now, and there's a big bounce that happened just below 60,000. So we'll see if that hit any areas, any support areas on the screen. But also I want to talk about something that pullback levels in the stock market. My second segment is going to be called What is Unusual About These? Okay? What's unusual about these? And finally, and we're not talking about Alabama here, roll tide. We're going to roll tide volatility style. So that is the plan that I have going on for you for today, Tuesday, November 16th, 2021. And again, as I did yesterday, I have invited my YouTube channel to hang out with us. So we are simulcasting right now live on the MoneyMorningLive.com main room and on the Tom's Trading Room YouTube channel. So good morning, everybody. Glad to see you hanging out here with me for the next hour. And let me just double check, make sure that all of our YouTubers are in, and they are piling in the room as well. So guys, here's what I'm gonna do. I want to first start off looking at, let's get right to it. Let's get to cryptocurrency first. I'm gonna go a little backwards from what I typically do today, because crypto did something that, a lot of people really didn't think was going to happen. I certainly didn't see the pullback coming. But at the same time, just because you don't expect something to happen, you got to be prepared for it. And being prepared for it for me is looking at these levels where these bounces could occur and create possibly other buying opportunities. And so that's what I was doing late last night, early this morning. If it looks like I've got bags under my eyes, I do. I've been up, all right, checking things out. So anyway, we did get the bounce down there around 59, a little bit below 59,000. We'll take a look at that first. I have the crypto levels on here right now, as you can see. But really what I want to get to is the cryptocurrency charts. So what I have up here first, let's start with Bitcoin. And for those of you that are joining me new for the first time today, raise your hand. Tell me you're here, all right? Tell me where you're from, for those of you that are coming in either through Money Morning Live or through YouTube, if you're brand new to me. The reason I ask that is because I want to make sure you understand what it is you're looking at here, okay? So Fibonacci, not just some dead Italian mathematician, but he leaves behind it, in my humble opinion, a way to spot buying and selling opportunities going forward. Most of the stuff that we look at, and there are 1,000 different indicators out there. Most of what we look at, folks, is what we like to call lagging indicators, okay? Moving averages, for instance, they're lagging indicators. And a lagging indicator is something where we need a bunch of data in the past, and the data in the past is trying to catch up with the data of today. Now, same thing holds true with something like Fibonacci, but Fibonacci allows us to project numbers in the future that the market could pull back to, pull up to, extend upwards, extend downward. And that's why I like Fibonacci so much, all right? Because it gives me an idea of areas that markets could pull to create other buying or selling opportunities, all right? So, Boston Mindy, you came in as a member today, I see. Thank you so much for the comment. I appreciate that. All right, so let's take a look at what we got going on here now. So The way I use Fibonacci is I look for key lows and highs on a chart. Now, I don't care about key lows and highs in the past. I need to see a key high very recently or a key low very recently, and then I need to back that up to its opposite counterpart. Let me show you what I'm talking about. So if you take a look at the chart right now, and I'm toggling on the big mouse, this right here, 7 days ago, 1, 2, 3, 4, 5, 6, 7, 7 days ago, 7, 8, 9 days ago, we had a key high in Bitcoin. Now, from there, that's my first point. Now I'm going to go backwards, and I'm going to find where the key low was. Now, there are two key lows in Bitcoin right now. One is about 50 days ago, and the other, let me show you the 120-day chart. There's the 120-day chart that took us down to 29,795. That's another key low. So we got two key lows in here. But you can see the 30,000 key low that took us up to just above 50. And then we had what I like to call the El Salvador China pullback. Okay, El Salvador took us down very quickly from about 53,000 down to 44. That was a big 8% pullback. And then we had about a 2 or 3 day move with China that took us back down to close to 40,000, and that became another area of support. So as you can see here, we have support at 29 that goes to last week's high, but we also have a support level here, all right, back in October, at September and October, that took us up to the high. I'm going to use this area of data right now. Now, I want you to pay attention to a couple of things, right? The long data from 30,000, and 30,000 was a significant pullback for Bitcoin. We're talking about a better than 50% pullback, all right, from the old highs back in April. So 30,000 to 67.5, pulling back. There are some interesting levels here. Let me get in on them, and then we're going to get short term, right? 53,127. I think that's a very good support level, okay? The 50% retracement is 48,672. Now, again, I have to back up and explain this to everybody in the room that is new, right? What does 38% mean? What does 50% mean? Because there are people out here that have these questions. If you go from the lows of 29,795 all the way to the highs of 67,549, and you take 37% off, all right, or 38% off of that low to high puts us at a Fibonacci retracement level, 53,127.26. That is a support level. 48,672, that is a support level. All right. Now, I want you to think about the 53,000 level. Keep that in the back of your mind right now. Let's move forward. What I want to do now is I want to take us to this shorter term pattern that I've been talking about. Let's put 55 days on. Let's update. So 55 days on, and now I'm dealing with the lows that occurred at the end of September. Remember, September was a bad month for both the stock market and cryptocurrency. We had pullbacks in both. October was a fantastic month for both the stock market and cryptocurrency. Now we're starting to see a little bit of indecisiveness in the stock market, and we've had a pullback in cryptocurrency. Now, 38%, and again, lows, 41,056. High, the same high we worked with before, 67,549. The reason I bring this up is because if I bring this in very close here, you can see that since last week at the 67,549 mark, right, we see a couple of days of pullback, we see some consolidation. We're hanging out above these moving averages here. This looked very bullish. Yesterday, we closed below this, and again, this area here became a support level, that moving average. That's the 30-day moving average. Well, we went blasted right through that last night. Came down to around the 58,000 change level. Close, but no cigar. Close. Now, I bring up 57,000. I also bring up 54,302. The reason why I'm looking at 54,302 is that's very close to that 53.1 level, and I think those areas there, this is the support level, the 50% off level from the most recent move up. It's very close to the 38% off level from the longer term move up that started at the end of July. You put those together and those become some very good support points. So do not be surprised if we see more pullbacks in Bitcoin. All right. Does everybody understand retracement levels on Bitcoin? All right, we're going to move up. I'm looking for percentages to move back. Why 38? Why 50? Why 62? All right, because those are the levels that Leonardo de Fibonacci determined were very, very interesting points on the graph, okay? And it also has to do with, if you take a look at Fibonacci's, you take your waist to your head and then you take your waist to the floor, and that's a Fibonacci level. You take a look at a seashell and you see all the circles of the seashell, right? Those are Fibonacci levels that come from prime numbers. All of this stuff locks together, and that's why these numbers, to him, and of course to me, were so significant and still are. All right, let's take a look at Ethereum. So Ethereum, ETH. This one's going to look a little different. We're going to use the same charts, though. I want to start with the 120-day chart. So let's put that up because that's going to take us all the way back to Ethereum's lows down there at 1786. There's the 1786 low back around July 20th. The highs that came in, guess when? 7 days ago. All right, 48.10.97. You take that low and you take that high, and we're looking at 38% off. We're looking at 50% off and 61% off. 36.55, 32.98, 29.41. Look what's happened with Ethereum. Did get a little bit of a move down, but notice Ethereum. You guys see something about Ethereum that looks different than Bitcoin? It's much stronger, okay? Much, much stronger. And so the reason I say that is because the pullback didn't come anywhere near the 38% retracement level yet for Ethereum. It's the stronger of the two coins. All right, let's take a look now at the 55-day mark. All right, remember 36 and 32. I want you to keep eyes on those levels, 3,600, 3,200 and change. All right, so take a look here. And you'll see this is the low to high that starts at the end of September and runs to 7 days ago. Here are your pullback levels when you take a look at Fibonacci on a shorter term chart. We have 4,045, 3,809, 3,572. The 3,572 mark is kind of synonymous with that 3,600 level that we were looking at earlier, okay? Now, again, Ethereum is the stronger of the two coins. For Ethereum to pull back to the 3,572 level, which it most certainly could do, the problem we have with that is that it gets down here in the 61% range, and that takes us out of, to me, if we bounce off 38, we bounce off 50, that's bullish to me. We get down here to the 61% level. This is kind of like that last bastion of oxygen before we could fall lower. I still like Ethereum at 3,800. That was a push level that we looked at about a month ago, and we pushed through that, and we ran right through my target of 4,500, my initial target of 4,500. We pushed through. Okay, we hit 48.10. We're pulling back. I need retracement levels to get new targets, and that's what I'm looking at. All right. So there you go. All right. So we can look at this a couple of different ways, and I'll bring that up right now. So, member quad 077830453, would your program have given us a sell on this? Let's take a look and see. All right, because the most important thing that I look at outside of Fibonacci, think about this. Fibonacci to me is a 30,000 foot view of what's going on, in this case with cryptocurrency. So how can I get a little shorter term view to find trading opportunities? Well, we use something called darknet. Darknet signals allow us to find channels within channels for both buying and selling opportunities. Take a look at Ethereum. So the buy on Ethereum, on a trader, looking at the shorter term trades, was at 3,400, and then there was a rebuy at 3,800. Remember that term push levels? Those were the push levels, pushing off of channel consolidation, pushing off of something I like to call triple stack compression. Now, we start moving higher, higher, higher. Look what happened 2 days ago. 2 days ago, you got the big S up there. Now, the sell signal does not mean that it's time to go short cryptocurrency. In fact, you can't go short cryptocurrency with the actual asset. The only way you can sell crypto, go short on cryptocurrency is go bearish on crypto stocks like Riot Blockchain or Coinbase. The other thing you could do is you could sell crypto futures. I would not advise that. But what this does is it tells us that the long signal is over. And now it's time to wait for the next signal, which is what we're doing. Right? So it was there. It was there in Ethereum. How about Bitcoin? Let's take a look back at BTC. So BTC, did it have any signals, and did it tell us to get out? Okay, take a look here. It had a couple signals. So way back here on the 30th, we had a buy on Bitcoin, and that was below 44,000. The sell came in to get to the sidelines at 62. Then there was another buy around 60. The sell came 5 days ago at around 64. Okay, these again, if you keep hearing me say the term push levels, you know what I'm talking about. We're pushing off of areas. So I don't look at push levels. I'm looking at fib push levels, and I'm looking at darknet push levels. I'm showing all of you darknet in the room right now. How do you get a hold of darknet? If you're a microcurrency trader, if you're one of our microcurrency trading members, then you have access. If you're a lifetime member, I'm going to give you access to not only this, the software, but an app that's even easier to use. All right? An app that if I click on it, I have access to, if I'm in the microcurrency lifetime group, I have access to this. See that? Isn't that cool? All right? That's basically a summarized version of what I'm showing you right here on my chart. So I can tap on the phone, or I can tap on that smart tablet and get the information quicker, more colorful, easier, etc. Okay, so that brings me up to the summary of cryptocurrency here for the moment, and that is, where do we go from here? Okay, what's that app? It's called Microcurrency Trader. You have to be a member of the Microcurrency Trader research publication, and you have to be a lifetime member of the Microcurrency Trader publication. And Perrin, can you, or Billy, one of you guys, give the folks some information, and you just did. If you want to be a Microcurrency Trader lifetime member, give Billy a call, 877-212-9163. So, and I still think we've got a very good chance that Bitcoin and Ethereum could set up for that next leg higher. And that could happen, guys, within the next 6 to 10 weeks is what I'm looking for. All right, fantastic. Let's move on. So yesterday, I got so deep into a bunch of things, I didn't even get a chance to talk about the stock market levels. I didn't get a chance to get into what's going on with SPY, what's going on with the bond market, the cash market. How about oil? All right, so let's take a look at some different areas in the stock market, okay? And to do that, let's go to our stock charts. Now, what I'm looking at here, folks, is I'm looking at stock charts, and what I like to do is I like to take that 30,000-foot view first to get an idea of whether or not we have some pullback levels, both buying and selling, in the stock market. Now, something interesting with Fibonacci levels that I didn't explain. If the Fibonacci level, if the line goes from low to high, then I'm looking for buying opportunities. If the line goes from high to low, I'm looking for areas to sell. And that might even mean going short. Okay? All right. So let's take a little gander at that. So first thing I'm looking at right now, okay? All of you that are with me, whether you're with me on Monday Morning Live or whether you're with me on the YouTube channel, take a look at this chart. You see a lot of lines on here. I'm going to get rid of some. I want to get rid of the moving averages. Why? They're clogging up the screen. How many of you in the room have either done this or seen somebody do it? You got so many indicators on the screen that it ends up clouding your judgment on exactly what the stock's doing. In fact, I've seen folks that have had so many indicators on the screen, you can't even tell what's the indicator and what is the actual chart. Who in here is guilty of doing that at one time in their lives? Absolutely, I have. All right, early in my career, I thought the more indicators that were on the screen, the better. And so what I like to do is, unfortunately, that causes analysis paralysis, is what I like to call that. And analysis paralysis can keep you from doing two things: spotting and getting into opportunities, and getting out of things you probably should be getting out of, whether it's for a profit or whether it is to cut a loss. So I find that, Mem, you're saying it right, becomes an abstract work of art. And when I look over at my YouTube channel, Karen's saying, yeah, too many indicators. So again, guys, what do we do about this? Well, what I like to do is I like to put a few indicators on there to give me the most amount of information. Okay, I got one indicator on here right now that does a lot of the job for me. That red line is volatility. That's option volatility. And that red line is the 7 to 30 day options, which is where I play in the world of options the majority of the time. Yes, I have options that expire longer. Every once in a while, I get something on that's maybe 3 months or even 6 months to expiration. And yes, I'm known to do a day trade or two, but the majority of my trading fits in that red line right there. So that's the line I'm interested in looking at, right? Look at it with me now. Take a look at what's going on just in the area of October. So as you see, I've got an 80-day chart on here. I'm going to pull this down to a 50-day chart because I want you to see that low to high. See that low to high? The lows, we had a pullback that happened in September. Our lows came in at around 430, a little bit below that on the S&P. At the same time, these lines up here, the options traders were saying, where are we going next? And they're bidding up the option prices. There's a little bit of fear in the market. The fear in the market is equated over here on the right-hand side of the screen. You see the left-hand side, this is the actual stock price. Right-hand side is options implied volatility. So we went from lows in October. Now look what happened at the end of October. At the end of October, we're up here. We're trading up in this area. So we've gone from 430 up to 455. Meanwhile, options, and this happens the majority of the time, but not all the time. When the markets go higher, option traders calm down. Option volatility drops. We saw IVs drop from 20 down to near 10. So what that means is that if you're trading SPY, let's say you buy a straddle on SPY, over here, the straddle might cost you, with 30 days to expiration, might cost you $6. All right. Right here, that same straddle on this particular day might be a different strike price, but that same straddle is going to have half of the time value in it. Time value is half off. All right. There's a half off sale going on with time value when the VIX is trading near, or this is very close to the VIX, but when the options for SPY are trading at a 10 compared to a 20. That's a rough estimate. It's not exact. But what it tells me is that options are a lot cheaper. That's when I want to be a buyer of options. Now, look where we are today. We're sitting up here trying our best to get above this 470 mark. And look what's happened with implied volatility. It's dropped back down close to 10. Yesterday, we spiked up a little bit as we opened higher and closed lower, right? So what else is going on this screen? I'm going to add one more indicator. I'm going to add Fibonacci. And the reason I'm going to add Fibonacci is because I want to get some perspective on some things, where the pullback levels are. The pullback levels, the short-term pullback levels, are still far away. We've got to go back to the end of October. We've got to go back a few weeks to find the 38% retracement level right here at 453.54. So there it is, a long way down. We're not there yet. All right, so I don't want to waste our time looking at a chart that's not telling us anything. So let's go look at some charts that may be telling us a few things. So let's move over and look at bonds. I was looking at the bond chart yesterday, and that shocked me. Here's what shocked me. The bond market had a high at 152, just below 152. The bond market last week came up and stabbed that high and then very quickly came off that high. And you can see the big moves we had in bonds just 4 days ago, 3 days ago, 2 days ago, and yesterday, as we dropped from 150 down to around 145 half. That was a quick 4-day move down. Do you think that had anything to do with spooking the traders in the equity markets, and maybe not, maybe having something to do with the SPY not trading above 470? Absolutely, absolutely has something to do with it. When this goes down, interest rates go higher, and even though there are a lot of folks betting that the Fed's not going to raise rates until 2023, well, they can start to cut the supply back, and that cutting that supply back is basically a telltale that rates may be on the rise. See, the Fed has a very, very tough juggling act to perform here, right? And the juggling act I'm talking about is the fact that food prices, gas prices, things are going higher, right? I was mentioning this yesterday. I had some friends come down from Oregon. My wife and I took them out to dinner, and we went to our local Seasons 52, right? My wife doesn't like the Capitol Grill. She's not into she is not a big red meat eater. I am. So, happy wife, happy life. I end up going to Seasons 52 because that's where she wants to go, because they have that more vegetable plate, more seasonal vegetables. So we go to Seasons 52, and I get the bill for 4. And, now I'm always looking at numbers. It's just who I am. I'm always looking at numbers. And so I can't turn it off. So I'm looking at that bill for 4. I'm like, hey, this bill's about 20% higher than it was the last time I went there. Last time I really looked at the bill, which was, I want to say it was probably earlier this year. I don't go out a lot. I'm a hermit. But what I'm looking at is I'm looking at the price of food going higher, right? Go to the grocery store, see the same thing. Go to the gas station. I don't visit the gas station often. It's not because I own a Tesla. It's because I just don't go anywhere. When I do, it's typically for a long distance. So I get that trip over in one shot. But we're seeing these things go higher, and it may be because of this chart, and it may be because of that chart, which is the US dollar. PowerShares double dollar. Now, PowerShares double dollar is really looking at the US dollar as a mix to foreign currencies. But can you take a look and see what I see? This thing's hitting new highs. Everyone thought maybe we were going to get a cooling off on the US dollar. But when you take a look at this, I mean, it confuses a lot of people, because a lot of you might look and say, this is crazy. I don't see the US dollar going higher, because every time I pull US dollars out of my pocket to pay for something, I got to pull more out. While that is true, we might be the best of the worst when it comes to looking at this chart, because this chart is a look at the US dollar versus a mix of foreign currency. Hitting new highs, folks. All right, how about oil? USO. I'm going to mention USO, and I want to look at natural gas for a moment too. Take a look at USO. Off of its highs of 58.45, we have pulled back, and we almost hit the 38% retracement level last week, right? We jumped above it. We've been dropping down again. This is yesterday's close. We inched out again yesterday in USO. Even though the market had started higher and pulled back, USO advanced. 38% retracement, very close to being hit. But what I'm looking for is if we close below that retracement, then I believe that the seasonality right now in oil, even though the demand is up, the demand should be dropping a bit. Seasonality should kick in, and we should see an ease on oil prices. That moves me to UNG. Now, natural gas has been all the rage. You've heard it before on this program. You've heard it on a lot of programs. But I want to show you something. UNG, this is just since Labor Day, has gone from 16. I mean, I'm not used to seeing it this high, folks. I'm really not. If I put a 200-day chart on here, let's just put a 200-day chart on. Let me show you what I'm used to seeing. Yeah, I'm used to seeing it down here. 9 single digits. In fact, I'm used to seeing it even lower before these guys. And I'm talking about the guys who manage UNG. Reverse split this thing every couple of years and prop it up because it gets so low that it just falls out of favor. So they take some shares away, adjust the price, and start over again. Well, this is something that is interesting because it just simply doesn't happen all the time. UNG's gone up and has gone from a $9 security all the way up to 21. It more than doubled in value since April. Now, back to the 50-day chart, because I want to share with you where everybody got excited. Everybody got excited when it was getting up there above 20. Now, how long was this thing above 20? Let's see. I see 1 day, 2, 3, 4, 5, 6. Okay, there's 6 days. There's 7 and 8. So 8 days on this 50-day chart, we were above 20. How many days were we above 21? 1 day. Okay. 2 weeks ago, I'm in a live stream, and I'm talking about this, and I'm showing people how to short this thing, how to short it and not lose your shorts by way of what's called a call spread. Call spread is when you sell call premium, and then you're simply going above it and buying call premium for protection. Now, I did that somewhere around this area here. And so it went against me for a little bit, but then boom, we dropped down to levels that were expected. Now, I want to mention a couple other things. See this Fibonacci retracement? 1597, 2177. Right here, you had the 38% at 1950, the 50% at 1887, and the 61% at 1819. We dropped through all three of those in a matter of a couple of weeks. That negates the Fibonacci. And if you're following that correctly, you realize that that fall apart, what's happening right now, tells us that the trend is no longer in place. You know, and folks like Garrett even said, okay, the fun's over with UNG. The fun's over with natural gas. I'm moving to the sidelines. I'm not trading gas no more. So I look at that as an indicator that, you know, I like mean reversion. Mean reversion is the more something stretches, the more likely it's going to come back into place. And that's exactly what we saw with natural gas. Now I want to look at one more, all right, as we are now at the top of the hour. And that is GLD, gold. Now, the question I have on my mind is, what is gold doing? And is gold, which, by the way, everybody hated gold last month. Everyone was talking about hating gold last month. Actually, I do remember Garrett saying this might be a very unique buying opportunity in GLD because of the haters that were out there and the value that was coming in and the breakout that he was expecting. I was looking at this an entirely different way. Number one, I own GLD. All right, I own GLD. I own physical gold. I like it as a hedge against things like, guess what? Bitcoin. Yes. Everybody, I love when people say, I can't stand gold. I never want to be in gold again. You know what that does? That pushes it down to a price that I like. And for GLD, that was down in the 160s. And so what am I doing? Acquiring GLD, watching it move slowly upwards, watching it very quietly while no one's talking about it. Well, everybody's been talking about it in the last week. So I'm wondering if this might be the time to get to the sideline, but I'm not a trader of GLD. I am an owner. There's a difference, right? Where's GLD heading next? Again, let's take ourselves to the 100-day chart. Let's just double the chart. Let's see where the next area of resistance is. Wow, we busted. Because look over here, you've got resistance right around the 171.5 level. We blew through that 4 days ago. How far back do we got to go? Let's take it 200 days. Let's move it back. 178.77 is what I see as the next area of resistance for GLD. All right. So guys, that ends my session on an overview with the markets. Let's move into what I like to call what's unusual. All right, what's unusual about this? So when I look at what's unusual, I'm talking about today, I want to talk about unusual calls and unusual puts. Now, what we're talking about is regular trading activity and then unusual activity. And now, how many? Let me throw a question out here. I want to see what you guys think as far as answers on this. Here's my question to the court right now. How many optionable stocks are there? How many optionable stocks are there? How many do you think are out there? Okay, throw a number out there, guys. All right, there's only 1,400 of you online right now, and that doesn't include my YouTube channel. How many optional stocks do you see? 500,000. That's a little bit high. 200, 1,000, 80%. I didn't know if someone was going to throw a percentage number out there, but that's probably not correct either. 6,000. Well, okay, 4,000, 35, and 3,500 I'm seeing coming in. Those are close. I don't know what the count is, but I will tell you the count that matters to me. All right, here's the count that matters to me. And let's see. The count that matters to me is going to be closer to what Mike said, what Jen said, and what Jen said again, and what Jen said again, and what Jen said again. You think Jen wanted to get her point made? All right. 325 is the number that I like. You know why? Because those are the options, the stocks that have options, that are the most liquid, that fall inside the 5-cent bid-ask window, and that trade weeklies. They're the most popular optionable stocks. That's what matters to me. Not 4,000 or 3,500 or whatever that exact number is. Okay? Really is 325 is the number I look at. Stocks and ETFs that have options that are what we like to call penny pilot options. All right. By the way, how many of you in here do not know how to get a list of those options? And you'd like me to tell you how to get a list of those options, because I can tell you how to do it right now. I can tell you where to go. All right. I can tell you how to get that list for free and very quickly and in an Excel format or CSV that you can grab. Please tell us. I'm going to tell you. You know that thing out there called Google? I want you to go to Google and I want you to type in penny pilot stock. Penny pilot stock or a penny pilot list. Penny, like the penny. Pilot, like the person that flies a plane. List, penny pilot list. You go put that out there. You're going to find something from, is it Mirax, I think? MEAX? Go to the MEAX website right off the Google search list, and you'll be able to see that penny pilot list, and you can click on that, and you can download that. And now you've got the list that I use, right? Now I take that list and I crunch it in. By the way, if you're a Tom's Option Tools user, we have that list already loaded. It's locked and loaded for you. Okay, so let's take a look at some unusual call volume by X number of days back. We typically use 30, and then unusual puts, which is literally the same thing, but looking at the put side. So in order to do that, we can do two things. We can go to our morning report. By the way, that's a free app for everybody that's here. And if you go to if you go out there and search on Tom's Option Tools, you can go ahead and download the app. And if you're not a subscriber, just go to the non-subscriber login. All right, fill that information out, and you'll have access to the MR, the morning report. Click on that, and you'll get these 6 different lists. I'm going to be clicking on call volume and put volume here over the next few minutes. Let's do that. All right, very quickly, let's do that. So I actually have that teed up right here in my stock option or within my desktop. This is what's coming up on the morning report today. So for unusual call volume, Sophie at the very top of the list. That's one that we hear about a lot. All right, what's going on with Sophie? So if I click on SOFI, that brings up the stock price itself. Earnings just came out. All right. It also shows me the bid and the ask on those particular options. And that is the 17.5 strike that everybody's interested in all those unusual, that unusual volume. Here's your implied volatility. That means it has dropped in IV. Okay. We've got some Greeks here all the way down at the bottom there. There's your unusual volume, folks. All right. Typically trades under 5,000 shares or 500 contracts a day for this particular option strike. jumped to 15,000 yesterday. That's why it came up on the unusual report. Now, the way to read the actual report is this. If you look at the report, whether you're looking at it on the phone, the tablet, or right here in front of me, I have the stock, I have the option in question, and I have the last traded price, and I have the volume for the current day. Well, yesterday's top volume. Boeing is on this list, all right? Monster Beverage, Chewy, Gilead, Cliff, EQT, Ford, PG, Procter & Gamble, and Plug Power are all on the list of unusual call options. Okay, on the unusual sell options, let's take a look over here. NVIDIA tops the list. Guess what? NVIDIA's got options coming out, or got earnings coming out in a day or so. RCL, TGT, that's Royal Caribbean and Target, Apple, Wells Fargo, TSM, Alibaba, AT&T, Disca, and rounding out the bottom 10 is Intel. Those are the unusually high put option volume. Now, I want to make sure that you get something real clear here, okay? Keep in mind, when I'm looking at unusual calls and puts, this does not tell me whether the person bought the calls or sold the calls. It just tells me the calls were traded. It doesn't tell me on the put side whether they were sellers of puts, like I am right now in NVIDIA ahead of earnings, or whether they are buyers of puts, like people who are on the other side of my trade that are losing money already. Okay? So that's, I threw that out there because I have a position in NVIDIA. I'm going to disclose when I talk about something, I'm going to disclose whether I have a position in it right now or not. Going down the screen here, I don't see, well, I do have a longer term positions in Intel, but everything else, I'm on the sideline right now on options. But as I can say, when you look at unusual calls and unusual puts, you see the volume there, but what you don't see is whether that was on the buy side or on the sell side. Now, I want to take you to the last part of the strategy here, okay? The last part of the strategy. And I see a couple of you guys talking about Alternative Wealth Network. This is the stock market, okay? Alternative wealth is not. That's crypto and NFTs. This is the stock market. This tool right here I have is available to anybody who wants it. Anybody who wants it. You don't have to be you don't have to be on any network. It's something that we share with you as part of being here with me. To get that tool, let me mention this, and then we're going to move into the third segment. You simply go out to your favorite iOS store or your favorite Google Play Store, and you go do a search on Tom's Option Tools. Got it? Tom's Option Tools. Download that. You're going to see once you log in, whether you're a subscriber or whether you have a tools account with us or whether you're a non-subscriber, and you click there, fill out that information, and you'll have access to one of these buttons. See the middle here? I have all kinds of buttons here for premium subscribers, but the one that I'm talking about is the morning report. And if you click on the morning report, you have access to these 6 lists. All right. Now let's talk about Roll Tide. Who's an Alabama fan in here? Ryan, are you a Bama fan?
Absolutely not.
You sound like you are. You sound like I'm the Crimson Tide.
I'm a Clemson Tiger fan.
Oh boy. Well, I'm you know what? So I'm kind of a transplant. I grew up as a professional new kid. You know what that is, Ryan?
I'm not too sure, honestly.
You ever heard of professional new kid? Some of you in here, a professional new kid is someone, I was kind of an Army brat. All right. My father was in the Army. All right. Served in the Korean War. And happy belated Veterans Day to everyone. I was not here live on Veterans Day. Thank you for your service. For those of you that are veterans, I am the son of a veteran who passed away several years ago. But what I wanted to talk about was, a professional new kid is someone who just moves around a lot, because my father went from being in the Army to becoming a civil engineer, which means he worked for the state, and that was whatever state had jobs for him. So I went from Pennsylvania, which is where I was born, Oh gosh, where did I not go? I mean, we went to the middle of the country. I was in Oklahoma for a couple of years. I was in Texas. I was in Mississippi, or Mississippi, as it's called. I think we skipped Louisiana, Alabama, Georgia, and then I loved travel because I did it as a kid. Professional new kid in school, that's the worst. I didn't even bother making friends because I wasn't around long enough. I didn't have good friendships until high school when my father stopped moving us around. So, those of you that now, anybody in here, is there anybody in this room that grew up as a professional new kid where you moved around a lot during your school years, whether your family was in the military or not? But I bring that up because I did spend my high school years in Georgia. So yeah, we hated Alabama, Ryan. We hated Alabama. I think we hated Clemson too.
Probably, yeah.
I mean, when you go through Atlanta, it takes you to get from the south side when you're going, when you see the perimeter from the south side to the north side. I mean, on a good day, it takes an hour to get from one side to the other. How long does it take to go through Clemson? Isn't that just one exit?
Yeah, it's a school, and that's about it. Not a whole lot going on in Clemson.
Clemson's really not a real town.
No, it
is a town. It's not a real city. That's what we used to call it. Anyway, I see a lot of you professional new kids out there. All right, I salute you. But anyway, so the reason I want to talk about that is that I had on the screen earlier. I called it roll tide. And so I want to talk about what roll tide means to me as a trader. Roll tide means is that if I'm looking at the tide of volatility, the tide goes in, the tide comes out. We can create trading opportunities based on the tide. So one of the ways I do this is with opportunities where we go 1 or 2 weeks prior when everybody's not talking about something like earnings. And as we get closer and closer and closer, you start hearing about these companies more and more and more until there's a fever pitch on the day that the earnings announcement comes out. Do you know I like to roll in, and when the tide crests, I like to get off the wave? That's what I like to do. Now, those are the best types of trades where you come in before everybody starts talking about earnings, and you get out right before the earnings come out, and you take advantage of the volatility surge. Now, another way we can do that is what's called when the tide rolls out, and that is getting into the sell side of something right before an earnings report. Now, that's going to be a little more risky because you don't know what kind of jump is going to happen. Roll tide in has less risk than roll tide out. Roll tide out, we're taking advantage of the drop in volatility. So I want to show you an example of roll tide in that I just did. Now, I don't want you to do this. This is an example. This is late already. We're late to this, but I want to show you one that's a good setup, okay? So I've said this before. If I'm in something, I'm going to disclose it. And if I'm not in something and I show it on screen, I'm not going to jump ahead of you. Okay, I will not do that. I will never do that. All right, so this is something I'm in already. So I'm looking at Hewlett-Packard. Now, Hewlett-Packard's announcing earnings next week. All right, I'm looking at the roll tide in. I also see that the last time we had earnings, look what happened the last 7 days. All right, we had that move up. Actually, it happened, guys. It happened the earnings before that. It happened the earnings before that. It happened the earnings before that. The last 4 earnings announcements, Hewlett-Packard has gone up ahead of its earnings. So here we are today, or not today, in the past. I see all this resistance coming up on Hewlett-Packard. I'm like, all right, you know what? We're hitting heavy resistance right now. Over the next week, if we just tick, 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 tick up, then it's going to follow the pattern. Now, there's no guarantee it can follow the pattern, but this is the pattern that I spotted on that resulted in a trade that I ended up doing yesterday, and an example for today. And again, I'm going to show you something that's setting up today that I think was equally impressive. So that's Hewlett-Packard. Now, that's the price. So I see a history of price rolling up. Here's the other thing I'm looking at. Look at this. Look at the volatility. It goes up, and then earnings, and then squash. And then goes up, and then earnings come out and squash. And same thing. Up, earnings, squash. Up, earnings, squash. And it's starting to go up again. Reminds me of the rowing machine. So I got this rowing machine. It just came in a couple days ago. All right. It's called the Hydro. Hydrow, the Hydro. Okay. It's kind of like a Peloton, but it's for rowing. It's a rowing machine. It's like a Peloton. So I logged in. I got this thing. I set it up. I logged in and I got set up my profile and I'm rowing. And I'm thinking, what does this remind me of? Or by the way, that's not the right way to row. The way to row is you start out here, you start crunched in, and then you go legs, core, arms. Arms, core, legs. That's how you row. Guess who didn't know how to row until he got on the Hydro? Me. What the hell has this got to do with trading? I'm going to tell you right now. You see this? This looks a lot like the rowing I was doing, where you have the legs, core, and then arms, and then repeat. Legs, core, arms, then you push back. Legs, core, arms, push back. Again, we can take advantage of both the move up and the move down if you know how to, where to, and on what stocks. Not all stocks do this. Okay? So, would I do a call on the upside with HP or a put on the downside? Okay, Kathy, you bring up a very important question, and I'll tell you why. Because what we're looking at here, the candlestick is the price. The red line, that's the options implied volatility. I want to be a buyer of options as this thing's going up, and I want to be either out or a seller as it comes down. It doesn't matter whether it's a call or a put when you're looking at the red line. So what I'm doing is I'm looking at price. Remember? What's price tell me? This price has told me that Hewlett-Packard tends to go up the week prior to earnings. Okay, great. What's the IV tell me? The IV tells me that the options premium tends to go up the week prior to price. So when I have a stock going up a week before earnings and the volatility going up a week before earnings, what do I buy a week before earnings? What? Calls. I don't buy puts. Puts go down when the stock goes up. I'm buying calls. Now, what if, is it possible that I could find something that goes down every, the last 4 or 5 earnings cycles, the price goes down into earnings and the IV goes up? If price typically goes down into earnings and the implied volatility goes up, what do I buy? Puts. When do I exit? The day before earnings. Okay? Think about ticket scalping at the World Series. When do you want to sell your tickets? Do you want to sell your tickets 2 weeks before the event? Or do you think you'll get higher prices being outside the stadium? I got two behind home plate. Who wants them? Right? An hour or two before first pitch. Who wants them? Now, if I'm holding on to those tickets by the 5th inning, you think they're going to be more valuable or less valuable than they were before the game started? Less valuable because the event is happening. Same thing we do with earnings. If I'm going to buy something that's earnings driven, I want to be out of it before the event begins. If I want to sell something, I'm selling that, with in this case, if I'm selling to open, I'm going to ride through earnings. Now, I'm just going to focus today on the buy side. So let me tell you what I ended up doing. I found a pattern of both price and volatility. And I went in and I looked at call options on Hewlett-Packard. Call options that expire immediately after the earnings report, and I plan on getting out of them immediately before the earnings report. So what's my entry? My entry is that I've already gotten into them. Okay, again, example only. I'll give you a setup. Just bear with me. Example only. Okay, so we have that set up. I'm in, and I am now going to roll tide in because I want to take advantage of the tide going up. And I want to get out right before the break. So that's the example I have for you with Hewlett-Packard. Now, let's talk about something that's coming up. All right, I got one set up for you right now. Oh, let's see where it is. Is this it? Yes, it is. Look at Nutanix, NTNX. Nutanix has earnings coming out in about 8 days. That was based on yesterday's chart, so now it's 7 days. So let's set this thing up. Let's take a little bit better look at it. So here is 7 days for earnings. Look at that thing just sitting there real pretty. It's actually come on as some support, and based on the last 4 earnings cycles, it's had a high probability of moving up the 7 days prior to earnings. Okay, great. You know what else moves up 7 days prior to earnings? The implied volatility. So if I'm looking at this and I'm saying the earnings are estimated to come out on the 23rd, let's go take a look at this, folks. Let's walk through what I would be doing with this particular trade. Guys, by the way, this is as far as I got. I haven't set the option trade up, okay? I'm showing you this as an opportunity, but is it going to give us a real opportunity? I don't know, but let's find out. Nothing's 100%. How many of you have found an opportunity in the stock market, then you went to go look at it on the option trade and it just didn't work out for you because the options might have been too illiquid? I've been there and done that too, okay? Estimated 1123 on NTNX. That doesn't mean it can't come out a day or later, or a day earlier or a day later. That is up for us. And by the way, what's the best place to go to? Where is the best place to go to? Guys, chat it out if you know. What's the best place to go to get a company's earnings report? Say it now. Say it and spray it. Right there on the chat. Earnings Wisher. Earl, you're quick on the draw, my friend. First one out of the gate. Earnings Wisher. How about my YouTubers? Anybody on YouTube that knows the answer to that question? Earnings Whisper. Has anybody tried going to the actual company's website and going to investor relations to find it from the actual company? Because that's the best way to do it right there. You can go to Zacks, you can go to Earnings Whisper, you can go to Earnings Briefings, you can go to earnings.com. But you know where the best place to go to is the actual company itself. All right, the actualcompany.com. Insert actualcompany.com. Go to investor relations. You'll find out the actual date and time, AM or PM, after market close, before market open. All right, so let's take a look at this here. So if I go and I look at 1123, NTNX, what's this going to cost me? I don't know. I don't know yet. What are the calls going to cost? And by the way, I've made this mistake before too. And so if you like this idea, if you've made this mistake, you know, the earnings are coming out on 11/23. I do not want to buy the options that expire this Friday when the earnings are coming out next week. You're not going to be able to take advantage of the roll tide. These option traders all know that option has no built-in time value for next week's earnings. Okay? Sebastian, I'm actually going to see Sebastian. I'm going to see Sebastian next week, I think, in Tampa. All right, so let's see what we got here. So we have, or maybe it's this week? I don't know. Anyway, I'm going to see Sebastian soon. So I don't want the 1119 options. You know what options I want? I want the 1126 options. 1126 options. Notice what happened. The 1126 were 229 by 241. That's not bad. Okay? So, again, I said I was not going to go in and do this trade. I will not do trades against you guys. That's called front running. All right? I'm sure it's illegal. I'm definitely sure it's immoral and unethical. But this is an example of one that has an interesting setup. So again, if I want to try to get myself a limit order, I'd go in and do something at the limit. Okay. Obviously, buy, you would insert quantity here. Now, when do you get out? Well, you could do a couple of things going on. You could look at getting out if it goes up 50% or goes up 100%. Or when do you have to get out? This is an 1126 option. It expires on the 26th. When do you want to get out? You want to get out when the earnings date happens. All right. NTNX call option is all about roll tide in. You know what I'm going to do with you guys on a future class? We're going to talk about next week. We're going to talk about roll tide out. All right. So again, guys, what we did here is no different than we do everywhere else. We spot rules-based opportunities. In this case, we're using volume. We're using volatility. We're creating an acceptable high probability / low risk trade. And then we're simply planning, executing, and managing said trade. Thank you very much for joining me, everybody. Those of you on YouTube, glad to have you on there. Subscribe if you haven't. You get these videos every single day. MoneyMorningLive.com. Love you guys. Have a great rest of your day. I'll see you again tomorrow. Bye now.